Hey guys, welcome back to the lecture. In this video, we're gonna be reading price and volume together, and I'm gonna be teaching you guys how to combine it and practice it live. Okay, so let's get started. This is the foundation of everything in Wyckoff. Okay, price and volume; those are the only two things we need in the market. Okay, so this is where the truth is revealed. All right, so let's get started. So why both are needed? You might be asking, like, why is that I need volume along with price? Okay, so um, well, the Wyckoff traders look at both. Okay, price alone isn't enough, right? Volume alone isn't enough as well. Together, that's where the truth is. All right, so price alone is incomplete, and actually, let me prove it to you. I'm gonna sit out of that. you know um, let me disable that. Coming down there, also that. All right, so see, price here alone, you can't. Let me actually remove all those stuff. You want the zigzag. So this is what the market looks like. Okay, yeah. Can you tell me, like, we can see prices is going lower high, lower lows, lower high, but like then, I mean, it's kind of random. It's, well, it's not random, but if you look at it, it's not making much sense. That's what I mean. All right, and here example is price is moving up. You see prices going higher, that's bullish, right? Well, maybe, because what if volume is diminishing? What if volume is declining, and what does that tell you? All right, now the reality is that move may be weak and there's no conviction. It's probably going to fail. All right, so yeah, like for instance, this case right here, when it's telling you, okay, the market is trying to go up, but did it really went up? No, right? It actually comes down. And this is what the reality, when reality hits the face, you will understand that, like, without volume, price is incomplete, and without price, volume is incomplete. And when we combine both of them, then the real truth of the market gets revealed. Okay, and let's reveal that truth. Okay, so as I said, price alone is incomplete. We can actually look at example 2, where price moving down. Okay, you see prices going down, make lower the space, but what if volume is declining? Okay, and the reality maybe is that the selling pressure is weakening, the move is probably about to reverse. Okay, and I showed you guys this one. So let's actually add. All right, let's go through this one first. So the volume is the confirmation. All right, so the key insight is that price tells you what. Okay, it tells you what is happening, it tells you the direction of the movement. All right, volume tells you how strong is that move, strength of the move and conviction behind it. All right, so uh, for for a given day, you might be coming in the market and see, okay, price is actually, okay, it's coming down around here, it's coming down, and then, like, you see, okay, price is actually tries to go up. But if you look at the volume, all right, volume here, you see how volume is diminishing around here. It's very low as compared to this one, and this was the biggest selling of the trader that happened there. Let me actually put it there, bring it down a little bit, and you see here, right? So if you see this and you buy in believing that, okay, price might go down, and then, like, you see around here, the selling wave of sellers started stepping in. This was the biggest wave since this time, and you see market just dips down there. Okay, So without volume, you can't tell it for sure what's going to happen. But when you combine volume, it actually tells you the strength of the move. So this move was very strong move, and the conviction behind is that the market is indeed going down. After this, it's going to go down, and see what happens, right? Now for here though, here you see after this big up wave, on this pullback, you see how small this was. So you can definitely buy it, but don't target for this much higher. All right, because this is still sitting there. Okay. Yeah. So price tells you what is happening, that we can see it here. It's like it's telling us what is happening, the direction of the movement. That's true. Volume tells us how strong that move was. It was strong indeed, but it wasn't stronger than this move. That's when the market goes back up, right? Just comes down. That's when you apply the conviction. Okay, after seeing this, I'm definitely, you know uh, I'm gonna definitely short the market. All right, so yeah. um, let's move on. So there is, as I told you, this different laws that's being applied all the time in the market. That's how the market moves, and those laws are the supply versus if the demand, supply and demand, effort versus result, and cause versus effect. So let's actually learn about the effort and result. Okay. And this is actually very similar to the Newton's law of motion. Okay. So let's actually understand it. So what is our effort? Effort here is the volume. Okay, the work being done. Okay, you can see the effort of this move, this much, right? Result is the price movement. Okay, what the effort produces. All right, so imagine imagine all these big blocks, like this pushing prices up, up, up. So this was the effort, that got applied in the market, and that effort, you can see it here. uh, yeah, here you see. Let me actually zoom in and show you. Around here you see lot of big down selling volume was coming purple, right? And then the market starts to goes up, but you see like the volume is actually diminishing, right? You see the volume on this upwave is diminishing, right? See, it is bigger, but it's not this much bigger. All right, so as it comes down, you see now the volume here is even lower than that. So we can indeed buy this one, but we can't target for much higher. Okay. Enough of that. Like what I want to explain you is the effort versus result. If this much effort was being pushed, okay, if this was your effort, then results should be also similar, right? Results should be much more than that. Right? If this is your big move, so the result should be definitely above than that, this high, but it wasn't, right? So there was effort indeed, but the result was very less. Okay. Yeah. So that's the Wyckoff core principle. Okay. uh, let's move on. Warning sign, but warning sign one is that high effort but small result, price movement. See, this is what I'm teaching you guys. See, high effort is indeed very strong, but what about the result? Right, result is bit less than this. Actually, if this volume is more than that, then why aren't we seeing the result? It's not there. So that's warning sign one, that there's not much buying is occurring. After this, selling will come in the market, and that's what does. But what we see, selling is also not there. you know. Here effort is less and the result is also less, like that, then the market actually goes up there. Okay, so warning sign 2 is low effort volume but large result. This is actually your low effort and large result actually. uh, you see how small this move was, effort, and how big this move down was, right? So that means there is effort, but the result is also, no, sorry, the effort is less, on the supply side, but the result is much more than that, yeah. So might not be sustainable, so it wasn't sustainable and the price just went up. Okay, so the real deal is high effort and strong result move is likely to continue. Okay, so see, high effort, you see, you know very high effort, volume was very high and the move was also very high, right? Result was also, and all this stuff was just a redistribution, that actually fueled up the market for for next move. And this is what we see, very high downside move, strong move. Okay, so this big move indicated that the move is going to continue, okay, until unless we see very big buy volume to the upside. Okay, so accumulation volume example, what volume shows during accumulation? Okay, price going sideways in a range, but look at volume, it's declining. So let me actually enable this one again. Okay, and let's figure out this. Okay, so what volume shows during accumulation is that price going sideways in a range. You see, price is going sideways in a range, but look at the volume, guys. Look at the volume above and down. Okay, uh, you don't need to look at the down volume that much. Just look at the wave. I'll put it downside here. Okay, and I'll enable the wave as well here. So zigzag, and I'll also add this one. So let's check it out. Okay, so here price is going sideways in a range. Yes, it does. Look at the volume. Okay, check it out. So see here we had very big down wave volume, then upside, you know, range was formed. All right, and then the volume just, this was the case. And if we look at the volume, why it's declining, you see, after this, you know, there wasn't much volume, guys. You see, it's like volume was just, this was absorption of the supply. Okay, supply is diminishing here. Okay, um, sideways range, volume declining, supply being absorbed. That's what I told you, right? Now, so after supply is being absorbed, then what happens is the price breaks out with increasing volume. Okay, sign of strength, very high volume. You see, high volume, and this was very high volume. After this, when it breaks out, finally pulls back, low volume, boom, again very high volume, right? So that's the sign of strength. And after sign of strength, those pullbacks are your potential trade to go long. Okay, so let's take distribution volume example. Okay, we know this is distribution, so let's look at the distribution example. All right, so see what volume shows during distribution is price going sideways again and volume declining. But what's happening, volume declining in a way is like, you see all this big movement happened. After that, Did we saw any like good volume movement like that? You see small volume there, small volume there, and only like after this point, we see this big volume surge, right? But you see the volume were very small there. Okay, that's what it's telling us, that the buy side volume or the demand volume is diminishing. Okay, volume declining. All right. So this is called like demand being satisfied. Okay. uh, and then what it happens is that price breaks down. You see price breaks down here, big wave downside with increasing volume. That's what we see here, and that's what your sign of weakness is. After this sign of weakness, you see this like pullback, low volume, boom, short, right? So that's how the distribution works, distribution example for volume works. Now, volume at extremes um, is selling climax, you see. So this is what uh, this is, you see here. Check this out. Very high volume, guys, right? Very high volume. So this is your volume climax, okay? And here, this is your selling climax, right? Very high volume, you see. And then after that comes your automatic rally. Okay, so this is after this automatic rally comes and your range gets established. All right. So selling climax, what does this mean? Is big down move? Yes, it is. Huge volume? Yes, we can see that. Panic selling, everyone getting out. Okay, you can see this, like, man, there's like a lot of volume, selling, and it's definitely panic selling. Okay, what usually happens next is that price reverses. You see this reversal, and that's what we call automatic rally. Right? Why? Because all the sellers are gone and no more supply remains, only demand remains in the market, and that's why we see this boom upside. All right, even with small volume it goes up, but it can't sustain it because it's an accumulation phase, and that's why supply is being absorbed now. As soon as it overcomes this line, then the volume surge goes up, markdown phase starts to begin, and then it finally takes uh, uh, role, finally takes into action after this point. All right, so that's your selling climax. Okay. um, what is buying climax, right? What is buying climax? Let's look at here. You see here, if you see, very high volume is coming to the upside, right? Relatively speaking. All right, so buying climax is big up move. Let's check it out. Is this a big move up? Yes, it is. Okay. Is there a huge volume? Yes, I can see that relatively speaking, volume is very high, Okay, so this actually shows greed and everyone is buying. Okay, what usually happens after that is that price reverses. You see, price reverses immediately after that, and you know that's what we call automatic reaction. All right, and why it happens is because all the buyers are gone and no more demand is left in the market, only supply remains. That's why the market goes down. Okay, you see market is coming down around here, right? So um, yeah, now let's look at the volume in ranges. Okay, um, let me actually put myself over there because I don't want to clutter this here. Okay, um, yeah, even I think this is much better. Yeah, so volume in ranges, the pattern you should see uh, so during accumulation, all right, or distribution, volume should decline. Okay, you know what? I'm just gonna put it here because as I'm seeing myself, it's much better to explain. Okay, so I'm just roll with it. Um, so the pattern you should see is that during accumulation and distribution, volume should decline. Okay, so you can see when there was this big accumulation was happening, volume was indeed declining. You see, uh, or distribution for that matter. After that takes effect on the markdown phase, then only we see this big spike in the volume. Okay, so accumulation means institutions are buying quietly, okay, absorbing supply gradually. Okay, what distribution means is that the institutions are selling quietly and they are satisfying the demand gradually. Okay, and the warning sign you should be aware of is that if the volume is high during a range, it might not be accumulation or distribution. Okay, it might just be a choppy trading, you know. Yeah. So just be aware of that. All right. Now, volume on breakouts, what we see, you know, volume on breakout is that uh, it can actually tell you if that breakout is real or not. Okay. You can see breakout with high volume, demand is strong, so move is likely going to continue. Okay. You can see here, uh, when this move started, this wasn't any good volume. This volume was very strong, right? After that pullback happened, right? So this move propelled that, let me actually uh, enable it, the candle like that. Okay. So see the color candle, candle color and volume color matches. All right. So see purple, very strong institutional buying, pulls back after that. Then again, buying comes in the market, buying comes in the market, and after that, you might be wondering like, what the volume should be very high, right, on this one, but instead it was lower than previous one, and the market breaks out, right? And immediately after that market can sustain it just goes down after that, right? So after this down move, you see market comes down, and then when this event happens, when this big volume comes in, the market goes up like that. Okay, so after combining volume with the price, in breakout or support or supply or demand zone, you can actually infer if the move is gonna be sustainable or not. Okay, so you can actually figure out if the market is gonna give false breakout or not. Okay, so breakout with low volume and no conviction, and it's probably gonna fail. Okay, as we saw that around here. Okay, so volume confirms or denies the breakout, right? Now, practical rules to remember is that high volume plus strong price movement means move is real, and it's likely going to continue. Okay, around here, you see this volume on this up wave, very strong volume, and like you can see the breakout volume as well, very high breakout volume. You see like this was volume confirms or denies the breakout, right? So market does indeed follow the trade, follow the breakout, and it goes up. It was real move, and then low volume strong price movement, false move, likely to fail. Meaning, see this low volume downside, see very low volume, man, on this down wave. Market stops, it doesn't go much further down, and then it again goes up, even much higher volume. All right, that's what this trading truth concept teaches you, how to combine volume and price, and infer the most probable most probable move and real move that we can actually capitalize and make money with it. Okay, so high volume, weak price movement, warning sign, something's wrong. Okay. Uh, yeah, you will. I have shown you a couple of example of this. So you know, like yeah, um, practical rules to remember is that I think this was, yeah, this was the move. Okay, see here it says high volume weak price movement, right? You see high volume is coming uh, around, I think it's here, right? Yeah, low volume was there, but the move was big, low volume is propelling this move. That means it can't stay, that means that was your warning sign and something's wrong. That's why market goes down. Okay, so yeah, and see the down wave volume is increasing. Then on up wave, you see this very small up wave volume, the market just comes down. Okay, and again here move is there, but the volume is not there. That means warning sign, and that's what happens. On the up wave, it like doesn't goes up, but on the down wave again, the volume is less, you know so that's why this big move was propelled, and you see volume increasing after that to the upside. Okay, then downward volume increased, market just goes sideways, then again it increased, and rest is history. It's like one, with this concept and methodology, the truth of the market, one can make a lot of money, just understanding what the market is telling you. All right, so we need to understand the language of the market. Okay, and that's what I'm teaching you guys in this course. Okay, so remember the practical rules to remember is uh, low volume in ranges. Okay, accumulation distribution likely happening. Okay, I've shown you that example. High volume at extremes, meaning climax, potential reversal coming. Okay, so yeah, see high volume there, potential reversal is coming, there's like accumulation happening or something. I think 1 hour accumulation happened there. You see this one, right? So this 4 hour move here, what's happening, we are actually zooming in, and then like looking at the 1 hour chart that we have there, the accumulation zone that's there. Okay, so you might have some questions to us, so let's clear that out. you know uh, the questions to ask in this lecture is that don't just look at price. Okay, don't just look at volume. We need to combine both of them and look at the market with the lens of price and volume together. Okay, so question one, is volume confirming the price action? You should ask yourself this question. Okay, is the volume is confirming the price? Okay, so you can apply that principle here. Okay, you see volume is confirming the price, so market is likely to go much higher. Okay, you see a lot of support there. So um yeah, like for instance, see here how the market made low but volume was low there, so market goes up, and then it makes new higher volume. Okay, second question you might be asking is like, is volume contradicting the price action? All right, and that's what I actually did here. You see, um, here you see volume there, then this there, like, right? So like volume was less than that, but the price made new low, right? So this like it's contradicting. So market should go up. And let me actually tell you a easier way of reading this. Okay, the very simple and easy way of reading this is just you can just add plot wave volume, and it's going to plot that there. Okay, so yeah, let me actually uh, add it again so it looks much sharper. Okay, so see, this is the edge that I want to teach you guys, how to combine volume and price. Look at them both together. Okay, so see, um, here you see 114 unit of volume, market goes up, good. Less volume on upward, good. But when it comes down, less volume, it made new low, it was in the support zone, demand zone, then the market surged back up. See, volume increased. Then on the pullback, low volume, right? On this upwave, high volume, you see, then the market goes up, propels to the upside. So this is after this, combining volume and price, you can actually predict any move, uh, and tell, what's the reason behind that move. Okay. So what does the third question you might be asking is like, what does volume tell me about its strength or weakness? That's what I told you, right? So if there is a strong move, okay, so for instance, see, this was, the volume was less than that, but the move was strong, so volume is not confirming the price. That's why even though it tries to goes up with higher volume, market just can't go, it's reverses direction. All right. Here you see high volume, market does go a little bit down, but with less volume, you know. So volume is less, price is more, like it's not confirming the move, so market goes up, So like that, this sort of intuition that I'm teaching you is what is gonna save you and actually give you success in the market. Okay, so yeah, after all these three questions, let's do some practice exercise, and I want you to really, really practice this. Okay. So your module one assignment is that go to your trading view, open chart like this, add Wyckoff indicator and add volume as I shown you this. And then, you should first identify where volume is high and where it's low. All right. Second, is does volume confirm or contradict the price? All right. Third step is, can you see accumulation and distribution? Okay, any one of them. All right. And step four is that practice these, get comfortable reading them together. Okay, volume and price. And as I after laying this out, you can imagine reading the market is very easy now. Okay. So module one is complete. All right. You now understand that who Richard Wyckoff was. All right. Supply and demand fundamentals. All right. Why Wyckoff works everywhere, and the composite operator concept I taught you. All right. Um yeah. The four market phases we learned: accumulation, markup phase, distribution, and then markdown phase, right? As I already told you, why Wyckoff works everywhere. Uh, the three universal reasons that we discussed: human psychology, supply and demand, all those stuff, and how to set up trading view, and finally how to read price and volume together. Okay, you can see how to read price and volume together. Even if you remove this one now, okay, it all makes sense. Okay, because we are actually combining volume and price together. Okay, this you can also remove it, because now you can see the color of the candle. Okay, how big that move was, like, was there an institutional buyer present or seller, like you see here? Yeah, it was there, a very high volume, but volume is not confirming the price, the way volume. So market is actually in the reversing direction, and here it actually, volume and price wasn't combining, because with the low downward volume, market goes down, so it propels the move up, right? High volume, market makes new high again with low volume on the down wave. That's good, because it's trying to go up. It's supporting our analysis, volume and price. Then again, market makes new high with high volume, and then it's yeah, with low volume it pulls back and then it goes up. So you can see the price and volume are in harmony, and the market is following the trend of that direction. Okay. uh, Trend of that market, and you can actually combine it throughout the session, throughout any market, and they will actually give you the most accurate analysis you can find anywhere in the world, basically. All right. So that's your module one. All right. What's next in the module two is we're gonna master the accumulation zone, accumulation phase. Okay. I will break down every phase from A to E. All right. I'm gonna teach you what that is. It's phase within phase. It's like once you have accumulation phase, you can actually dissect that and understand what's going on there as well. And I'm going to teach you how to identify springs, shakeouts, and learn when to enter trade. Okay. So first, uh, yeah, you can take a quiz. Your foundation is complete. All right. As I've taught you everything live. Okay. Now, now you have the foundation of price and volume together. They reveal everything. Okay. So as you are combining them, you know you can understand and read any market. Okay. So module 1 gets completed, and remember, price, volume, effort, result, foundation. Okay. So price is the result. Okay. Volume is the effort. All right. And when we combine them, that's the foundation of the market. Okay. So thanks guys for watching, and I hope you like the content. Okay. And I'll see you guys in the next module where we're going to be mastering accumulation. All right. So I'll see you guys in the next lecture. Thank you.